Okay, well, that was a lot of talking, wasn't it? All right, so I think at this point we should have talking, so I'll start over on that one. Yeah, thanks, guys. Um, all right, so what I was saying, if you couldn't lip read, was that over here I was actually making a couple newsletters, one saying that we should consider another direction because last week we had that flag that a lot of talking heads out there and other traders and kind of publications that I check out were thinking that the market was going to resolve to the upside. And part of that was because they were a lot of people had been saying that we were at peak inflation. Now, I think we're pretty far off from peak inflation. I think the market is also agreeing with that. That's why we saw Thursday, Friday, and Monday down pretty heavily. So come check out the video newsletters that I have over here, kind of showing you why I thought we might want to make sure we're not too heavy on one side, which would be up, and that I thought that the market actually seemed likely to go down. And then, of course, that was confirmed basically Friday with the high CPI number, 1% increase versus 0.7. So yeah, I think we still have a ways to go for inflation before we can really address that and say peak inflation. So this is going to be a little bit. Yeah. Thanks again. I see you guys all yelling at me that my mic was not unmuted. I have like 3 or 4 different screens here. I am broadcasting in 5 different locations. So yeah, there can be a lot of buttons to make sure I push correctly. Anyway, so today, FOMC, it's going to be a pretty quiet day. You can see the market did pop up a little bit just because we were extremely oversold. And then, other than this initial pop this morning, I bet you we just go sideways for the rest of the day until we get FOMC. And at that point, it's going to be some fireworks. Now, the question is, what direction is the market going to go based on the FOMC? Well, oftentimes news is just an excuse, right? The market already kind of knows which direction it wants to go, and they're just looking for a reason to make it go that way. So some theories and some concepts that might be out there is, well, if the Fed raises interest rates, that means they are aware of inflation, that they're tackling it, and that they're serious about it, and the market is at least going to be happy about that. That they're seeing that they're actually taking something serious about this. Yes, it means it's going to be rough on other things because interest rates are going up, but it means that the Fed is at least not asleep at the wheel and they're taking things seriously. So that's one thing. Now the question is, are they going to raise 50 basis points, 75 basis points, or 100 basis points? I think it's pretty much guaranteed that it's going to be 50 because that's what they've been saying. So really the question is it going to be 75 or 100 outside of the expected 50? And then the question is, well, how's the market going to react? If they come in with 75 or 100, is that good? Because that means they're taking a really serious stand. Or is it bad because, crap, it's 50% or 100% more than the market was expecting with the 50 basis point raise? So those are just some ideas. I have no idea. I don't know if you guys know. We're all guessing, and it's really kind of just up to the market and how that's going to happen. We could even see one move and then another move, kind of like where we're back here when we had the FOMC right there. We had big move to the upside because, again, I think the 50 basis point raise, and everyone's like, yay, at least the market, the Fed is doing something about this. But that turned out to be just a massive short covering rally for the day. And then the next day it rolled back over and we got another big move down. So, we could get something like that too. Just be ready for kind of any direction. And I would just generally say that I think if I were only looking at the charts, we should be looking for price to generally move or trend back to the upside just because it's so darn oversold. We have a giant gap between price and the 8 EMA on the daily chart. We're down here at the third ATR there as well. We're way outside of the third ATR on the hourly chart, and we've got a pretty big gap between price and the hourly 50. Now, if I were to push back on that, even my own readings on this, we do have price over the 15-minute 50. That's good. That's a start as far as price goes. But if I were to look at the 15-minute Moxie indicator, that is a long way off from being anything constructive. Yes, they are both green, and yes, they're both going up, but look how spread they are from each other. That is not good. That's not strong. So I'm kind of concerned that any kind of up move that we do get, because we are very oversold. I would like to see price move up. But it doesn't, at least according to the Moxie indicator, it's telling me that this is not something that we should really trust. It's probably not something that's going to go for very long or last for too many days, and that any up moves should be considered basically at risk so far. We still also have a lot of work to do, at least on the hourly chart, because that 8 and 21, the distance between that 8 and 20 was still pretty big. So we still have a lot of downside energy. We still have a lot of downside stuff that we're going to have to work off. And so the market could also just kind of chop around. It could chop sideways for some time until something really gets resolved. As I said, I also think that kind of any move to the upside is for now considered a bounce in a downtrend. You know, even this thing was ultimately a bounce in a downtrend. So again, kind of what I've been saying is we're gonna have to take this one step at a time, because this market is just all over the place and it's pretty crazy, and there have been big moves, and it takes some time to repair and to move out of the directions once this has been once we get these giant moves like this. You know, it just takes time. So it's challenging, you know, and we got the summer, so the summer doesn't really move too much because, you know, a lot of the bigger traders are gone and away, and there's just kind of less money moving around. And speaking of less money, I keep reading again, more stats. The crypto market at its peak was, I think, $3 trillion, valued at $3 trillion. And now it's valued at $1 trillion. So 2/3 of value of money has gone away, just poof, you know, vaporized. And this is the same thing we're seeing in the markets generally. Since the S&P and the NASDAQ are down, you know, 20, 30% roughly. I don't even know what the IWM is down. Small caps are down. And then we're seeing Tesla is down 30-something%. You know, we're just seeing a lot of these big names. I mean, everything across the board is just down. I mean, oil is the only thing that's been up, and even that is starting to wear out. So you got to think about the wealth effect and the wealth destruction that people who have their 401ks, or housing is probably going to start rolling over soon too, and going down a bit. That there's just money coming out of the system. Think of how many hedge funds and how many firms are either being liquidated, on the verge of liquidation. Melvin Capital is having, you know, they're defunct now at this point. And then Coinbase and some other crypto exchange. I don't know about Coinbase exactly, but the other crypto exchange, I forget the name of it. I think it also starts with a C. They're not allowing anybody to do any transactions or sell anything, because they're running into some problems too. So things are kind of locking up out there, and there's just not like less money. There's less money out there and in the system, which is exactly what the Fed wants to have happen, because we're in a bubble and inflation's going crazy. But you have to think about this, at least to the upside. When we're trying to look for, say, longs, or look for the market to move up, or giant shorts covering rallies and short squeezes, they may not happen, or they may not happen to the same extent that we've seen in the past, because, well, there's just not as much money out there in order to put into the market. Yeah, Celsius. Thank you, Junior. That was the one I was thinking of. Yeah, stop transactions to halt the run on the bank. the virtual run on the bank, right? With all that crypto. All right. Yeah. Good morning, everybody. So thanks again. Appreciate you. Let's see. So yeah, Austin, I looking for oil to roll over. Yep. It's the last one standing. Commodities to fall. And this is the peak inflation. Yep. Next couple of months will be the start of bad economic reports. Totally with you. Totally agree with all of that stuff. All that is very true. And then let's see. Yeah. Enduro, we'll look at the IWM, and then you're also asking about the S&P has 2 acceleration gaps, and what's my sense on those getting filled? Yeah, what's my spidey senses telling you on those getting filled? So what you're talking about over here is basically this gap and this gap getting filled. You know, I'm not so sure, especially this top one. I had a video out there, a bear market video update out there that you guys can see under services on Profit Pilot. And when I made that video or that webinar, I had these 2 kind of crosshairs drawn, because it looked a lot like 2008. And I was like, well, let's see if this works. And at the time, I was very clear. I said, look, I'm just playing around here. I was doing some fibs and kind of drawing some lines and trend lines, and just want to see if this thing works. I'm not really banking on it, but I just want to see if it does it. Well, they didn't work. You can see that this bottom trend line, I mean, price just blew right through it. So fine. I do find it interesting though that the first gap was right where the line was. So that's kind of interesting. And the only reason I'm keeping this on now is just to see that if we do get a move up, I wonder if the move up would maybe come and tag the underside of that moving average. If it does, that's interesting. It's something to watch for. Yeah, trend lines are not everything. I really prefer moving averages because I do think those are more legitimate as far as following stuff, especially if I'm trying to just draw something that I think the market's going to do. But it is something interesting to watch that at this level where I had the X, you can see that is exactly where price did end up holding for quite some time. So in one way or another, there was a bit of a target right there. That too, and you can see here, let me get over to this level. You can see that this kind of faded green line that I have drawn here, which was some key support and resistance, you can see that price did exactly get rejected at it last week going into the CPI numbers. So pretty interesting that that level like worked, like really worked. At this point, yeah, price is pretty oversold. I have a buddy of mine who's another trader out there. He was kind of thinking that, you know, he's wondering if we're getting a similar situation like this because we had an undercut of the prior low, and he's kind of wondering if we're going to get a big move up like this, and so a big move up like that. So if that makes sense, that's one thing to consider. Like if we eventually get a big move to the upside and we actually kind of make new swing highs, he's kind of thinking 4,300, you know, okay, that's where this green line is. And again, that would kind of, through symmetry, would kind of give us this kind of similar move right there if you want to check that out. But I was talking to him and he agrees. I think it's going to be in phases. Like we're not just going to go like this right here, most likely. It's probably going to be something more like, you know, we go up here, we kind of come back down, test a little bit, and then go up. I think that if that were to be the path, it's probably going to be similar to this, to where, you know, maybe we come up like this, we come down, we test again, and then we move up. That's the bullish case. The bearish case would just be, you know, we kind of move up, and then we kind of do this, and we run into resistance, and we roll over again. So just food for thought. Don't have a clear picture. I think right now the thing I'd be looking for is a bounce to the upside, a reversion to the mean on the S&P. Same with the NASDAQ, same with all the indices. And then we kind of go from there. So let's see, IWM, and if we come over here to, let's see, the monthly and weekly, you guys can see I've drawn in a air pocket. And you can see we're sitting right on that air pocket. And it'd be kind of interesting to see at some point when that goes through to the other side. I think it will, because again, with that gap, I think it will go to the other side. The question is, will it do it now or will it do it later? Well, you know, I'm kind of thinking maybe later because I do think that the market, the S&P, should bounce. And so that's what I'm looking for. And of course, everything's going to be kind of moving in a similar fashion. The IWM is sitting on the monthly 50. It's kind of gone through the weekly 200. So those are some things, some areas to look at. And then as far as the daily and the hourly, you know, just kind of right back down here at prior support. You can see here, same thing, also oversold, also a giant gap between price and the 8 EMA. So really, I would be looking for price to kind of meander back to the upside, up to, you know, overhead resistance of some sort. It's just got way oversold, and it'll probably take a few days to do this. You know, it took 3 days to do it on the way down. It'll probably take longer on the way up. And yeah, after that, we just need to see then where price wants to go once it reverts to the upside. So, all right, let me see what's going on out here. Let me read some comments. So yeah, Anders, as far as the S&P, I do think that eventually we're going to hit the weekly 200 and the monthly 50. And I don't know exactly when. I don't think we're going to necessarily hit that now. I would imagine we're going to hit it later, because you can see that those are still pretty far down there. That's a sizable move down. I'm not sure if it's just going to go straight there. So I'd imagine we're probably going to get up or sideways before we go down. The question is, how far up do we go? All right, let me get back to Facebook and YouTube. See what you guys are looking at. Yeah. Oh yeah, so UVXY, I was mentioning UVXY yesterday, saying, hey, it's pretty extended. We should be seeing price move down, and so that means we should see the market move up. And it was kind of just doing nothing yesterday, so we took a little bit of a day trade, got out of it, like 1.5% down, and then turns out it worked out today. So it was an overnight trade, basically. And the market did move up a little bit, so UVXY did move down. And this also, looking at the UVXY, is part of the reason why I'm looking for the market to move up, just because everything is too far in each direction. The market's too far down, the UVXY is too far up, and they kind of need to come back to the center, whatever that center is. Now, if we look at the UVXY, you guys know my 50, 250 maneuver, so 50, 200, 50 maneuver. That's part of why I was saying, hey, I want to see the UVXY come back down, because it's only moved over the 50. It has not come back down to test the 50. So I want to see it come back down and do that. Now, of course, it can go below the 50. Totally fine with that. Just saying, hey, at some point, price needs to come back down towards the 50. And then you can see here yesterday and, what was it? Today's Wednesday. So yesterday and Monday, price got way outside of the 30 ATR. Again, signs and signals that price has moved way too far. And I was looking for price to fall back down to the 15-minute 50 yesterday. It didn't do it until the last, 20, 30 minutes yesterday, and then it just continued down there. To the Moxie traders out there, Moxie subscribers, I said I was looking for price to come back down to the hourly 21, and there you go. We're actually beyond the hourly 21 today. So that did work. And then we can see here on the daily chart that there was a gap between price and the daily 8 EMA. So again, just way, way overbought for the UVXY, oversold for the S&P, and we're looking for things to come back down to normal. Now, the other thing, I had a subscriber yesterday over in the Moxie channel ask me, I think something about $15.50 or $15 or so, I don't quite remember, and said, hey, when it gets there, should I just buy the UVXY? And I said, I can't give that kind of guidance. I can't just say, oh, if price gets down to a certain level, buy it. I really have to wait until I see price get there, and then I got to look at the next lower time frame to see price actually start to set up. So part of that, if you look here, if we show you how this setup on the UVXY going into the 15-minute time frame looked, I can't just say, oh, hey, come in here and buy at a certain level. I really have to wait to see price engage with the moving averages and see the Moxie indicator set up. But coming into this, and this is what I was notifying some of the traders about, was that you could see price going down. Notice that the 15-minute Moxie indicator kept moving up and kept getting tighter and tighter and greener and greener. So this right there, let me hammer this one home, because it is pretty important, at least for anybody who uses the Moxie indicator. In order to really confirm an up move, you want to see the Moxie indicator over 0, positive, and you want to see it tight. You want to see those two lines look very much like one line, because that means they agree with each other. Now take what I'm just showing you right here, and you can see how price got over the 15-minute 50 and there was a nice move. And you can take that versus, say, price was over the 15-minute 50 here, but the Moxie indicator not so strong, a little bit of a gap between each other. Now compare that to what we're seeing on the SPY currently. What does that 15-minute Moxie indicator look like? It doesn't look like anything, right? So you can see that, yes, they are both going in the same direction. They're green, but look how spread they are. Look how weak that is. That is not a good, strong setup. One of them's above 0, one's below 0. That is vastly different than what I just showed you on the UVXY, and when UVXY finally had its move to the upside. So that's why I'm saying I'm not really trusting any kind of move to the upside on the S&P. Yes, I think it should generally go that way, but at least right now, the Moxie indicator is telling me that this is probably not going to be the strongest situation. It could be messy. It could pop and flop. I mean, anything's possible, but this is telling me that even though I think price should generally migrate higher, it's probably not going to be very good or very strong to the upside with that. All right, so let me go back to UVXY, and then we'll hop over to NEO. So Nick, let's see, 50, 250 on both the daily and hourly for the UVXY. Yeah, so there's that. We could, a little bit of a 50, 250 right there on the daily, but definitely on the hourly, 50, 250, definitely. So this initial move, actually, this move went much further than I thought. I was kind of looking for something like this because, well, that's what's happened the last few times. But yeah, at this point, I want to see the UVXY continue to fade. But I do think that this fade will eventually come into some support, and it's going to be interesting to see if this next leg down in the market is going to be the big one. Because look, we keep getting closer and closer to really blowing over that daily 200 on the UVXY. So the UVXY is probably going to be a pretty good sign or signal of when the market is really going to puke. And I would imagine that at some point the market's really going to puke. You know, it's bad out there. It's really bad out there. And the sooner we can just get this over with, the better. And we'll see when we can just wipe the slate clean. So yeah, be real careful out there. All right, so NEO. So Venus. So as far as NEO goes, again with the Chinese stocks, I know a lot of people have been talking about. Let me get the right. There we go. Weekly, daily, hourly. I know a lot of people have been talking about China and asking me questions about China. I'm still not very interested in kind of anything Chinese right now because I still think it's got a ways to go. But they are lowering their interest rates because they're trying to ease, and so that should be bullish for the market, which it seems like it is, at least near term. They are kind of catching some reprieve, and I've seen a lot of Chinese names move up lately. But as a whole, these are not in uptrends, and I don't think that they've bottomed either. I think that they have a lot of work to do before they can really kind of say, hey, this is the next new uptrend. So if you want to try and catch some long trades, that's great, but you're not out of the woods as far as being bullish, a bullish trend on names like this. So for example, NEO. Part of the reason why I'm saying that is on the weekly chart, you still have the weekly 8 significantly below the weekly 21. That is still in a downtrend. There's a lot of work. There's a lot of movement. There's a lot of chop and jostling around that's going to happen in order to get the weekly 8 on top of the weekly 21. So when you can get the 8 on top of the 21 and you can get price to stay up there and then follow up to the upside, then great. Then I'll be more willing to say, yes, we're in an uptrend. But that weekly chart is still very, very far from being an uptrend. Even the daily chart, while we do have divergences, and yes, there are some up moves, and yes, this thing is moving to the upside, you have to be nimble about what you're doing here because it's just not out of the woods. I mean, it is still trying to get past a downtrending daily 50. So the next step that I'd like to see is if this is going to go to the upside, I want to see the 50 angle up, and I want to see price following the upward daily 50. It's not there yet. You know, if it does get a move, that's probably going to be the first move, which is when price is able to get past the daily 50 as resistance. But then usually the next move is we see a pullback into an uptrending moving average, and that is the second move. And that would be the area that I would be more interested in buying if I can find that area. But right now it's just not there. It's just not there. Yeah, Anders, retail capitulation. I will have to see about that. Again, we'll have to just see how long this whole thing is going to last and when we can rip that Band-Aid off. So NEO, let's look at BABA and just kind of see a couple things. Yeah, as I said, they are moving up, or at least they're trying to, but that doesn't mean they have to really start a new trend. They can just bounce along the bottom for quite some time. Yes, we're seeing some positive pressure come in, but look, the daily 50 is still in a downtrend. You're still underneath the daily 200. The weekly 8 is still below the weekly 21. Like, we've still got a lot of work to do. And even the weekly 50 is in a downtrend. So I'm just not interested. Let's see, Baidu. Baidu's just been a big mess. It's been a big mess right through there. Not much to do. Yeah. Okay, so yeah, so Latte, yeah, Fed Day, it's bad and good also out there. Let's see, even so, UNG was another area where and a couple traders in the Moxie group caught this short. They traded KOLD, which is the inverse ETF of UNG, and basically following my directions of, yeah, I mean, I wouldn't be surprised to see this thing come down. Now, I had no idea that this was going to pretty much make the entire move in one day. but it was doing what we needed it to do as far as, hey, watch out, I think this thing's going to move, fall to the downside. Notice here how every higher high on price was met with a lower high on the hourly Moxie indicator. That is something to note. That is negative divergence. That is what the Moxie indicator is trying to communicate to you about energy and momentum. That every time price got higher and higher and higher, it was doing so on less and less gas, less and less energy in the tank. And then this last move right here was a bit of a surprise, because right around here I was saying, yeah, we should be starting to see price to roll over. A bit of a surprise, but that was a sucker move. And you could see a new high with a less high Moxie indicator, and then it started to roll over. So that one actually started to collapse while I was on the mic, like the last 5 minutes that I was on the mic. And then you can see here, basically price got underneath the hourly 50, the Moxie indicator super red. And then news about, I think, the LNG plant in Texas disrupted things, and boom, huge move to the downside. So yeah, UNG starting to wear out. USO also, I think this is the beginning. You know, it's hard to say at this point, but I would not be surprised. I think this is the beginning of the end for USO. You can see it kind of did this blow off top a little bit. Like, look at the weekly chart. You can see a gap here between price and the weekly 8 EMA. And you could see that price just shot straight up like that. It was like almost too good, right? I've talked about this over at Simpler Trading to all the options group and the Moxie group and all that kind of stuff. And I said this was kind of an exuberant run. Like it was so good that price never touched the hourly 50 until it finally did, until it changed direction. And that oftentimes is what you see of kind of that last like blow off exuberant top. It's like it's too good, it's too good, it's too good, until it just kind of implodes. And that's what I think that's what we're seeing here. And you can see price went right up to the daily third ATR, and now we've just kind of, I mean, honestly, it just kind of looks like you've kind of done your last little spurt on that thing. So can't quite confirm it yet. It's just kind of a feeling and observation, but I do think, and a lot of my trader friends think that also, if oil gives it up, that is going to be the death bell for the market. So since oil is pretty much the last thing holding stuff up, I think that's going to be the key. And you can see here we do have some negative divergence on the daily chart as well. So let's see. Yeah, so Cindy, the Moxie indicator works well on the 15, the 5, and the 2. So I don't do it all the time, but I show it, and everything I talk about, all the principles and all the methodologies that I show you on the, say, weekly, daily, hourly, 15, can all be applied to the 15, the 5, and the 2. It's just different time frames. It's just smaller, but all the same concepts are there. So everything, just apply it down to it. Yeah, Brian, thanks. Yeah, you're answering all the same things. Sounds like you've been around for a while, so that's good. Good to see you guys. Yep, and then Austin, exactly, USO, divergence on the daily, sharp hourly decline. Yep, 15-minute in a downtrend. I mean, here you go. Look at the 15-minute. Here's your negative divergence on USO. You could see price kept going up, and then here the Moxie indicator kept going down. And then you can see a double top right there 2 days ago. So yeah, double top, negative divergences. I mean, it's all coming home to roost, isn't it? Let's see. Got just one more minute, Bill. Let's look at HTZ. You're saying there's an hourly 5,250. Yeah, I see that. So hopefully you're thinking short. And yes, there's probably a little bit of room in here. I'm not sure how far this thing could go. Eventually, you'd have to see if price can break that previous low on the daily chart. But yes, oftentimes in a bear market, if you want to short something, shorting at the 21 is a pretty good spot. So that's that. And then also you can see here that price is outside of the third ATR on the hourly chart. And we do basically have a 5,250. And we also have price over the hourly 50 with the Moxie indicator below 0. So yes, hopefully you're looking at something going short. I do think eventually, when you get the timing right, I have a feeling that this is going to be a decent move to the downside. How far down? Not sure, but that would be the direction I would take it. So, all right, guys, I got to get going. And remember, if you're interested, come on over here, check out the last couple newsletters that I had. They've been pretty spot on. So over here, profitpilot.com, and then I will see you guys in the trading room actually in about, half an hour or something till the next segment. So see you there. Thanks again, guys.